This podcast is brought to you by PwC.
Hi everyone, and welcome to another episode of Family Office Insights. Today I'm joined by Anita Mikkonen, who's one of our partners in financial services tax, and we're going to be talking about real estate. Anita, thanks for joining us. Can you start by introducing yourself and giving us some insights on how you work with family offices?
Hi, Lisa. First of all, thank you very much for having me today in the podcast. My name is Anita Mikkonen. I'm a tax partner in PwC Switzerland, based in Zurich. I work in the tax area for more than 20 years now. Unbelievable. Always FS tax. I also focus a lot on real estate, so I lead the real estate tax and legal services practice in Switzerland. And I do have clients from all the institutional investors, but also a lot of private clients, family offices, in particular with real estate in the real estate area. So not only Swiss investors, but a lot of family offices with foreign families, which are interested in investing in Switzerland, Swiss real estates through Swiss structures or through foreign structures.
Yeah. I mean, I have to say real estate is a really popular asset class with family offices we work with. And Switzerland and Swiss real estate comes up very often as something that our non-resident families are interested in buying. Obviously, residential real estate is pretty heavily restricted in terms of investment. But what are you seeing with non-residents in terms of accessing this asset class in Switzerland?
Yeah, indeed. I think residential asset is heavily restricted, regulated. There are obviously also, I think, trends we see how still foreign investors can benefit from investing in Swiss residential real estate. So one of it would be to invest through listed investment companies, which is, I guess, then the structures are set up. So for diversification reasons, that's still very popular. But on the other hand, also fund investments would be an option. Or then what we see more interest in is also the tokenization. So that tokenized real estate would be structured in a way that even foreign investors can benefit from tokenized residential assets.
And so how does that work? Can you give us a bit more detail on how the tokenization works?
Well, tokenization is tricky from a legal perspective in particular. So it's not direct tokenization is not possible yet because of the register, which is still a physical register. So it's a bit old-fashioned for the digital age. But there are structures with indirect tokenized assets through SPVs, so through companies, but also through types of structured products, certificates, which are beneficial also from a tax perspective. And not only from an investment perspective as such.
Got it. And in terms of jurisdictions, if you're setting up a fund or a company to make an investment into real estate, which jurisdictions are you seeing that are still popular? Is it the old classics like Luxembourg, or are there new players that are coming up?
Well, we see, new players, not really. We see the old classics. One is still Cayman Islands is popular, especially when it comes to family investments, family offices. I think then the other one is the old traditional, a bit more regulated in the sense of also a bit more burden, which is Luxembourg. So Luxembourg structures are very, very common in the fund industry.
Yeah, I that resonates exactly with what we see. Now, one thing I think is quite interesting is the impact that tax has on the attractiveness of an asset class. And in the UK real estate market, the buy-to-let really has become much less attractive because there are so many taxes at acquisition, on an ongoing basis, and on sale. Is that something you have to consider in Switzerland?
Well, you obviously always have to consider taxes. In Switzerland, in particular, it's not one tax that covers whole Switzerland. So we do have cantonal and communal taxes and levies to be considered. So it is really critical to look at the canton or common where the assets is located. There is obviously the real estate capital gains tax upon exit, where you have kind of higher rates if you have a shorter duration where you hold the asset. But in general, it's not, I guess, a reason why investors do not buy real estate. So it's just to be really carefully managed.
Yeah, and I think my relatively uninformed view that a lot of people are buying real estate in Switzerland are doing so to hold for the longer period. So then I guess the capital gains tax is less of a consideration.
It is, and it has been also obviously a very good market. Prices have gone up. There has been a lot of value increases with also a lot of gain, which was obviously good for the government if then the asset was sold for gains reasons. But it is indeed the horizon of holding is rather long term in Switzerland.
Yeah. So tax isn't a real challenge. What challenges do you see in the asset class?
Well, I think obviously the return on investment has been a bit under pressure with I guess some of the prices were still high up. Financing costs have risen, energy costs, especially in real estate area. Energy is a topic, but also the obviously higher interest rates when there was refinancing rounds, which impact the return. Where other asset classes have equally good returns, so then it's a question of how liquid do you want to be? On the other hand, also ESG, I think sustainability. There is a pressure on real estate in particular to make sure the assets also keep their value, and in particular also when they funds or other structures hold the assets, that the value keeps up.
And just so I understand, so the sustainability impact you're feeling at the moment, the regulations and increased taxes, that's really at the asset level itself, and making sure in future that the house you have meets all of the new requirements going forward.
Yeah, I think a lot of this is on the asset level. It's obviously a cost for the property owners to invest to make sure the asset keeps the value. The asset also has I think in terms of if it's within a fund that the asset manager will carefully select investments, that they would only invest in real estate that is already kind of on a certain sustainability level, energy efficiency level. If the asset is privately held, I think there is more discretion. There is not much pressure. On the other hand, if then the owner would sell the asset in future, it is important to make sure to invest still during the holding period. Otherwise, there will be a write-off at the end of the day if then the value is considered to be lower.
Yeah, and my sense is a lot of people maybe haven't thought about that, particularly in the private ownership space at the moment.
Maybe not that much. And again, it's also a bit of question of revenue. How much do you want to, or do you need to earn? How much do you want to, or can you invest? And so I think it's a bit of trade-off, and if the pressure is not big enough, that they may hold off the investments at the moment. But also it is a topic more on the financing side, so lenders would also look at the assets from a sustainability and energy perspective.
Yeah. So last question, if you could buy and invest in real estate anywhere at the moment, where would it be?
Well, I would personally invest in a hotel in a mountain location.
Okay. Is that for personal use or as an investment?
Probably for both.
Very smart. Well, I like the idea of that. So thank you very much, Anita. That was really interesting to learn about real estate in Switzerland. And we'll speak to you again soon.
Thank you, Lisa.
Thanks. Bye-bye.